Alright, good afternoon, everybody. Hope everyone had a good day. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure should be the same as it was on Friday or Thursday. Okay, I have to do a quick one today, so apologies in advance for that. I really need to try to be out of here by 4:40 Eastern time, so I just got to catch a train back into the city. I got a couple people that I have to meet up with. But, you know, we got a little bit of time, not too much of a rush, so let's talk about the market a little bit. SPYs are down 0.36%. Qs are down 0.2. IWM is down a full percentage point. It looks like we're selling down here a little bit after the close. A few of these names, Palantir, Nvidia, getting hit a little bit. So, you know, luckily because I'm in a rush, there's very little to talk about when it comes to the indexes for today. Granted, I don't do an afternoon meeting on Fridays, and there's probably a decent amount to talk about that is, excuse me, that's left over from Friday's action. But starting with today, it was as boring could be for the most part. I mean, literally all the excitement happened in the last 5 minutes of the day. But so we gapped down this morning, which just seems like a little bit of a reaction to being up too much on Friday post Jerome Powell. And we pretty much spent the entire day digesting it. The SPYs were particularly boring. If you look at the price action in the S&P, this first hour and a half, I mean, this range was brutal. Absolutely brutal. Basically a dollar range with nothing going on in the SPYs at all. And we broke up a little bit, and then we rolled down a little bit, and then we sold off into the close. Qs, I guess, had a little bit more action because they were very relatively strong. They broke out of this consolidation, this bearish consolidation to the upside, pushed through the moving averages, found a little bit of resistance at the gap fill, pushed a little bit further into some resistance from Friday, and then same thing, weakened out in the afternoon, sold hard into the close. They were very, very much led by Nvidia today, which had another price target increase. And then the IWM, which was up the most on Friday, I really don't remember off the top of my head just how much, but I think it was a 3% plus day for the IWM, was down the most. So, same thing. The Qs, which were up the least on Friday, performed the best today. The IWM, which is up the most on Friday, performed the worst today. But there's no real damage to this IWM chart from today's trading session. It's just kind of giving a percentage of, a small percentage of its massive gain back today. So, not really much to concern about. Switching over to the daily charts. Look, Friday was a real big day. Today, the SPYs have an inside day. The Qs have an inside day. The IWM also has an inside day. I like inside days sometimes, even though they're a little bit boring, because they give you some context. They give you some points to notice. Like, are we going to get a 1, 2, 3 situation where yesterday was a big day, today was a rest, and then tomorrow we get big continuation? Or when you look at like the IWM, which is still pretty extended from a massive move on Friday, it looks like it probably needs more time than just one day. Or do we fade this entire move back down, which I don't think is impossible. I really don't think it's impossible. So obviously what happened on Friday, just to do a brief recap of that, is Jerome Powell came out at 10 a.m. His entire speech was released all at once at 10 a.m., by the way, so it all came out at once. It wasn't like we were having to necessarily parse through statements as they were coming out that can create big gyrations in one direction or the other. It was pretty much, here it is, and we're ripping. There was I think the beginning portion of Pat's note today did a good job summarizing what happened on Friday, but you know, basically he said that there's risks to both sides of the mandate. He said that you're starting to see the impact of tariffs and inflation. He said that there is a reasonable case to be made that that's going to be like a one-off impact as it works its way through, but there is also a chance that it becomes something that gets a little bit more out of control and built on. And then he said that the employment situation is clearly getting worse, but and he said this a couple of times now. He said at the last Fed meeting also. He said the employment situation is getting worse, but curiously, as the employment situation is getting worse, the labor force is shrinking. And if you want to read through the lines there, the labor force is shrinking because we are kicking out illegal immigrants, a lot of them, and many of those illegal immigrants are workers, right? They're working. So you're having a shrinking of the labor force as jobs are declining as well. And those are the two sides of the mandate, right? Is maximum employment and stable prices. So what he has said previously that he then kind of switched or pulled back on a little bit, at least I thought on Friday, was that the price stability is the more important part of the mandate because you can't have stable employment without having stable prices. But what he turned around and basically said on Friday is, yeah, we're seeing tariffs come through. They are a concern. We're going to continue to watch it, but the rate in which the employment situation is deteriorating potentially calls for a cut. So he pretty much all but said that we're probably going to be getting a cut in September. I guess there still is a chance for some of these September numbers, some of the August numbers that come out in the very beginning of September. I'm not exactly sure what the date is of the Fed for September, but I assume that we're going to see some of these economic numbers for August ahead of time. And there's a chance if those numbers are really bad that things could still shift, but he said that we are still above the neutral rate, which is where he wants to be because inflation is still above 2%. We're above the neutral rate, but there's enough room here with how unemployment is getting worse to come down. So the thing that I noted, I don't know if anybody listened when I was on with Greta earlier, is that these cuts, as he indicated them yesterday, are very, very different than the cuts that we saw in 2024. The cuts that we saw in 2024 were done within the confines of a really good employment situation, not the current employment situation, which is deteriorating. They were maintenance cuts. They were done because you don't need to be as restrictive as you were really, you become more restrictive. I keep trying to find the right way to describe this succinctly with my words, but basically, you've got 9.1% inflation in 2022 that gets driven down in 2024 to 2.6, 2.7%, something like that, I think. So you can bring, if the idea is to stay at a certain amount of restrictiveness for the market to try to bring inflation down, as inflation comes down, if you don't lower rates with it, you actually become even more restrictive. So the rate cuts that we saw in 2024 were basically, hey, inflation has come down by so much that in order to even maintain the same level of restrictiveness, we can bring the interest rate lower. That's different than now because inflation is, these numbers that we're seeing, even though we're beginning to see an uptick again, inflation is roughly exactly where it was in 2024. Like that, we're still at that like 2.5% to 2.8%. That's pretty much exactly where we were in 2024. So from a restrictiveness, you don't need to lower rates any further just to maintain the same level of restrictiveness. So now these rate cuts are more to do specifically with the fact that the employment situation is starting to get worse. That's what this has to do with, more specifically. So these cuts are a little bit for different reasons than in 2024. This is more about concern around the economy, and lower rates are a way to help the employment situation. With all that said, it's a 25 basis point cut. I'd be very, very, very surprised if we got a 50 basis point cut. It's going to be a 25 basis point cut in September. That's what the market seems to be pricing in. That's barring that we don't see like a big uptick in inflation between now and the September Fed meeting. But probably looking at a 25% cut, and all it did was bring the expectations back up, right? Because all that really matters is what happens, what changes versus expectations. We brought expectations for a cut from 75% in September back to like 90-95%, pretty much where it was. So personally, I thought that the degree to which the equity market moved higher was a little bit of an overreaction, but that's a personal thought process, and the market is smarter than me. And at the end of the day, make no mistake about it, the S&P right now looks super, super bullish. The S&P never looked not bullish, really. At best, you could have argued that game that I like to play, bullish, bearish, neutral, right? Let's look at the indexes. Are they bullish? Are they bearish? Are they neutral? Because doing that simple game, I call it a game, the bullish, bearish, neutral game, doing that simple game gives you the information that you kind of need in order to be making just general trading decisions on should I be leaning long, should I be leaning short, should I be a little bit more long, short, a little bit more neutral. The market dictates that to you. And ideally, all three indexes are giving you the exact same message. Oftentimes that's not what happens, but ideally that's what all three, you're getting the same message from all three indexes. And even in the depths of this pullback, we broke one level of support. We never closed below the 636 support. We never closed below the 21 EMA. We never had these moving averages cross. We never made a lower high and a lower low. At best, you could argue we might have spent one day here last Thursday, which was an inside day, where the index was like turning to more neutral than bullish. Or it was neutral bullish, like somewhere in between the two, at best. The Qs are weaker. They got to neutral, I would argue, and I would argue they still are neutral unless they get back above the high from August 19th. So these are neutral. But the IWM is also an index that really never lost its bullishness. Ever since we had the breakout that occurred back here on August 12th, we got really extended, went sideways a little bit, let these moving averages catch up, digested some of the extension. We never lost 225. 225 was the level I was looking at to go from bullish back to neutral. And then obviously after Friday with this thing up 3%, it just got back onto full-on bull mode. Not that it ever really left it. So we want to look at the market in terms of bullish, bearish, neutral, but we also want to look at it within the context of things like extension. And this IWM here got a little bit too extended. So, all in all, the market technicals here are bullish, neutral, bullish. SPY, QQQ, IWM, respectively. But the interesting thing to me, at least, about this market, when you look at it over the course of like the last 2 to 3 weeks, like really most of the month of August, is that we really started to lose some of the leaders of the AI trade. And when I'm looking at the neutral NASDAQ, I'm still asking myself, well, can the Qs get below 560, in which case they get bearish? And if that happens, is it still Nvidia and Palantir and those stocks that are leading us lower, or are they going to get back above this like 576.50 to get back into more bull territory? And obviously, I'm not sure what's going to happen. There's a good chance that Nvidia on Wednesday is what answers that question for me. But if we do, and this is an if-then statement, if we were to continue to trade the way we were for most of August, and you lose these Nvidias again, then there's a good chance that the SPY doesn't actually give follow through to the upside, because the SPY itself is also market cap weighted. So in other words, I just bit my tongue. In other words, what I'm really trying to assess right now with this market is, are we going to be going back into kind of the market dynamic shift that we saw underneath the surface of the dispersion that we've seen for August, where the leaders got weaker, but then they're kind of buying up a combination of value and meme stocks and short squeeze stocks at the same time, which is interesting. Or did Friday really just change the dynamics again, where we're just going back into full-on bull mode and the leaders lead? And you certainly saw that Nvidia was the leader today. Nvidia was the stock that really pushed this entire market up. I was very closely watching that 179 to 180 area. I noted the relative strength in the stock, even as I took a couple day trades in it. Made money in all three of those day trades. The last one I took was probably more pain, more difficult than it was worth, even if I still made money at the end of it, only because of the big pullback into the close. But that's the real question. I guess it really does come back down to Nvidia. So it's not surprising that we saw a really quiet, boring day today. We're at the end of August, so without an event like we had on Friday to shake things up, it's going to be fairly common to see these really boring, rangy type of trading sessions. But I would note that last week, which is a similar deal, mid-late August, things can be really boring. we had 2 days that were extremely, extremely boring. 2 days that were some of the most boring days of the entire calendar year. But we also had 2 days that were actually pretty exciting, because if you can shake the market up for some reason or another, there is lower liquidity right now, without a doubt. And that lower liquidity can get things moving. And we had that for Tuesday, Wednesday last week. The Monday, Thursday were very, very, very boring. So, yeah, there you go. So I think that pretty much covers everything I have. It's a brief overview of Friday through today. Again, from a day trading perspective, I was really conservative. I took a handful of day trades, but like I was saying in the VTF when I was doing them, I was really conservative, and every single one of them was profitable. Probably because I wasn't too greedy, it wasn't too heavy, it wasn't too early. I didn't feel like I needed them. It was just like, I think here's a decent spot, so let me take a little bit of stock, and I'll be out pretty quickly with, very tight targets on what I'm looking to do. A couple trades in SoFi short, a couple trades in NVIDIA short, trade in Palantir short, that kind of all worked. And then we just want to remember to continue to keep an eye on some of these kind of crazier stocks that are starting to get into like a day 3, like a Unity, like another day or so up. I think that will be something to watch. If this Jumai could accelerate a little bit further above 850 tomorrow, that would be something to potentially watch to come in on the other side. SoFi, another one. That was a big kind of day 2 today in SoFi. This one's starting to extend again a little bit. Great company, big fan of SoFi, but a little bit of an extension trade might be building itself. Even like Space is running, so they're still kind of squeezing the shorts in some of these meme stocks. So that's pretty much all I got. I have to rush out of here, but if anybody's got any quick, important questions, I am happy to answer them because I do have a few minutes. Going once. Going twice. What do I think of Palantir here? Sure. So Palantir held in really well today. It was interesting just how weak Palantir was off the open. It's one of the more exciting stocks off the open. I was like, oh, this is super interesting that they're selling Palantir right back down again the day after the Fed. And on Friday, they were able to snap it back up to the ADMA on the daily chart, but now they're just crushing it again. And then lo and behold, as the NASDAQ caught some relative strength, this thing full on reversed and then ended up being okay. And if anything, the downside tail on the daily chart kind of indicates that this thing probably isn't ready to just immediately crash back down through 150 and give us another leg lower. There's some buyers that are certainly present in the stock that are holding it up. I think we saw a mixed option flow on Palantir today. I'm pretty sure we saw some bearish action, but we also saw some 185 calls go off, I think for September. I don't exactly remember which date. So, there's still some buyers present in this. Friday's high, I think, is really important as it becomes confirmed by the ADMA on the daily chart. So Friday's high is 163.20. The ADMA is down 163. So I really don't want to see that stock. Ideally, if I'm trying to be bearish on it, which I am, I don't want to. I got a little bit of a problem above 163. I have a bigger problem above 165. And if it ever negates the high of the negative Maribozu here, which is 172 spot 30, then any short process is off the table. But, even down at 150, 149 that it was trading at today, that's a lot of downside extension on the daily chart. I know it's a very high beta stock, but you're looking at it trading at 149 with the ADMA on the daily at 163. $14 of downside extension when the market's holding in doing nothing. It's a lot of downside extension. So I'm not surprised that it held in. I'm a little bit surprised at the degree to which it bounced. I'm not thrilled by the downside tail today as someone who's trying to be bearish on it. But there's not overly cause for concern as long as it does not get above, again, that 163 to 165 area. And this is another one, though. It's going to move on NVIDIA. So just be prepared for that mentally if you're involved. Open is also on the list of the crazy meme stocks to potentially short. Are they hitting this down after hours right now? No. It's about where it closed. They hit it into the close. Yeah, I avoided it. I thought about getting involved as this thing was approaching 6. Probably could have. It is technically an RDR. A lot of risk from that high to yesterday's high. Today's high to yesterday's high. But it is technically an RDR, a day 3 RDR. Yeah, I avoided it. There was probably some opportunity to short it. It just seemed like, I don't know, Monday and they're squeezing everything, so I was paying attention. I sit going to 82. I don't know this company's business well enough to give you an idea of whether or not I think there's actual substance underneath the surface here. AMD, not AMD, AMC, when it was really running, I could tell you that there was nothing under the surface of that company, right? Even back then. Open, I just don't know the business well enough, but so could he go to 82? I don't know, maybe, but we've seen Carvana become a very real company and recover. I remember buying Carvana at like what, $18 or something like that on a breakout back in the day, and I caught a big move on it and thought I was a genius. You had this breakout back here in May of 2023. I bought like, I think it was like 18. It might even have been lower. I was definitely all out of that by like 27. I think I made like 100% on that trade. Thought I crushed it. Here we are at 362. So I don't know. I don't know if Open's gonna be the next thing. I have no idea who this guy Eric Jackson is. I've never heard his name before until Josh started mentioning it a couple weeks ago. But he seems like a clown to me based on the whole thing he's doing with Drake and stuff. So I don't know. Doesn't mean he can't move stock. We see a lot of clowns move stock these days. So yeah, I'm going to end it there. Sorry about that, just because I need a few minutes. But it was a quiet day today. So I hope no one hurt themselves by over trading on a day like today. And we'll see how we get tomorrow, and we'll take it from there. Have a great night, everybody.